So, is Apple stock a buy? Comment down. uh, So, is Apple stock a buy? Comment down below if you think Apple stock is a buy. Do you guys use Apple or do you own Apple stock? If so, comment down below. Make sure to sign up with my Weeple link in the description below and get yourself some free stock. Anyways, so if you've been living under a rock like me, the Magnificent Seven have been doing pretty alright. Apple today is 0.07%, Microsoft is up 1.75%, Amazon is up 1.91%, Nvidia is up 4.47%, Google is up 2.27%, Tesla is up 1.20%, Meta is up 3.25%. So looking at Apple on the technical analysis perspective, so the current support level is 168, the current resistance level is 197. A current pattern I see is a triple bottom pattern forming on the daily. If Apple does decide to form the triple bottom pattern, then we could see a reversal to the uptrend in the next couple of days. So what is a triple bottom pattern? A triple bottom is a visual pattern that shows the buyers taking control of the price action from the sellers. A triple bottom is generally seen as three roughly equal lows bouncing off support, followed by the price action breaching resistance. So, how would I day trade Apple? So, for today, March 7th, if I had traded Apple today, I personally would wait for some type of pattern to show up. Using the 5-minute time frame, you can see that Apple performed a double bottom pattern, in which led to a reversal to the uptrend. Now, if I had gotten in at the second double bottom, I would have personally sold at my personal resistance level of 169. Now, let's say, oh, I missed out on the second double bottom pattern. Well, later during the day, you can observe that Apple was kind of just doing nothing, except it was just kind of ping ponging back and forth in that little range. Had I picked up Apple within the little small range it was stuck in, I could have sold it at the resistance level it was ping ponging back and forth in. Now, if I was feeling really confident, I could have rode this all the way to 170, but it's always safe to play it nice and steady. There's times when I like using the moving average indicator. So if you pay close attention to Apple, it got rejected 3 times by the 50-day moving average. Had you played puts on Apple, you would have made a nice gain depending where your personal sell level is. Now, if I had gotten into this play the third time Apple touched the 50-day moving average, I would have sold at 169.10. So what is the 50-day moving average? The 50-day simple moving average is used by traders as an effective trend indicator. The 50-day moving average is considered the first line of support in an uptrend or the first line of resistance in a downtrend. If a stock's price moves significantly below the 50-day moving average, it's commonly interpreted as a trend change to the downside. Another entry move I missed out on was by using the 9-day moving average. You can see that later during the day, Apple landed right on the 9-day moving average and it just went like crazy. Now me personally, I would have sold it as soon as it touched what? Now me personally, I would have sold it as soon as it touched the 50-day moving average. Now what am I saying, dude? Now, if I was feeling really confident, I would sell it at the 200-day moving average, but knowing that the stock market hates me, I would personally stick to selling it at the 50-day moving average. So what is the 9-day moving average? A buy signal is generated when the price moves above the 9-day moving average, while a sell signal is triggered when the price moves below the 9-day moving average. This strategy aims to capture short-term momentum in the market. Basically, if the stock is above the 9-day moving average, it signals a uptrend. Meanwhile, if a stock is below the 9-day moving average, it signals a downtrend. Now, how did I do today? Well, today I made negative $3,334. Let me just say, this is by far the worst trades I've ever done. Am I ashamed? Yes. Am I happy? Am I proud? No. Am I glad this is fake money? Yes. If this was real money, my grandma would have a heart attack. I mean, she already had one, but that's besides the point. So starting off at 2:19 p.m., I bought 100 call options. Then at 2:23 p.m., I sold. The reason I bought at 2:19 because I was like, well, the stock's price is exactly on the 9-day moving average, and was like, what's the worst that could happen? Oh boy, guess what happened? The worst thing happened. SPY's price broke the 9-day moving average, and as soon as I saw that, I sold because I was like, okay, maybe in these next couple of trades I can bring it back. Man, was I wrong. Basically, at that point, I was just desperate to gain back my losses. For some reason, I actually thought I was going to gain back all my losses. That's where I kind of cracked under pressure and was like, yeah, screw technical analysis, let me just hope for the best. But that's when reality hit me. So around 3:09 p.m., I bought a couple call options, and then I bought some more at 3:12. So I saw support was at 5:14, and it was like, okay, I'll enter as long as it doesn't break the support. So then around 3:16 p.m., I sold all my SPY call options because I saw it was having trouble breaking the 50-day moving average. So I was like, okay, if it touches it, I'm selling. So in total, that trade gave me a gain of $360. Not bad, but it made me realize I need to be a bit more patient because at that point, I was just hoping to gain back my losses. I just mentally gave up because I snapped. And when I snapped back and was like, wait, I can do this. I just have to be a bit more patient. No wonder my self-esteem is low today. So what does everyone think? How would you have traded SPY? Are you investing into the Magnificent Seven for the long term or short term? Let me know in the comments down below. This concludes the video. Hopefully you guys enjoyed it. Get yourself some free stock when you sign up with my Webull link in the description below or wherever you're seeing this. As always, take care everyone, and I'll see you in the next video. Also, this is not financial advice. Alright, see you guys. Take care. Bye.